Before you celebrate a $700 car payment, stop. Because the monthly payment may be hiding the real price. Americans are now financing new cars for longer than ever. Nearly 1 in 4 loans now last 7 years or longer. 7 years. Think about what 7 years actually means. A kid can go from kindergarten to middle school, and you could still be paying for the same car. Meanwhile, the average new car payment just hit $777. That is a new record. And 1 in 5 financed buyers pays at least $1,000 to $1,000 every single month. But the monthly payment isn't even the scary part. The dangerous number is hiding behind it. And once you see it, car shopping looks completely different. Imagine I offer you this car. I ask, how much can you afford each month? You say, $600. That sounds like a smart budget. But I can change one simple thing. I make the loan longer. Suddenly, an expensive car looks affordable. Not because the car became cheaper, because we slice the bill into more pieces. Think of a pizza. Cut a pizza into 8 slices. Or cut the same pizza into 12. Each slice becomes smaller, but you still bought the whole pizza. That is exactly what a longer car loan does. Every car loan has 4 numbers you must understand. Number 1, how much you borrow. Number 2, your interest rate. Number 3, how long you borrow. And number 4, your down payment. Here's what America looks like right now. The average financed new car is about $44,000. More precisely, $44,156. The average down payment is only about $5,800. And the average APR is around 7%. APR is just the price you pay to borrow money. Borrow more, borrow longer, or borrow at a higher rate. And more of your future paycheck belongs to the lender. A 7-year car loan sounds harmless. Until you turn 7 years into real life. That's 84 monthly payments. 84 chances for life to change. You could change jobs, move to another state, have a baby, buy a house, lose a job, or simply need a different car. But the loan doesn't care. It keeps arriving every month. In Q2, 23.9% chose 84 months or longer. That is the highest share Edmunds has recorded. And this creates our next problem, interest. Interest is money you pay. Without getting another car, you don't get another tire, you don't get another engine, you don't get another seat. You are paying for time. Average new car borrowers now pay nearly $10,000 to $1,000 in interest. About $9,811. Imagine stacking 98 $100 bills. Now imagine handing that stack away and receiving no extra car. That's why monthly payment alone can fool you. A smaller monthly number can feel cheaper, while the total loan becomes more expensive. But now we reach the part most people never understand. Cars usually lose value as they get older, but your loan doesn't disappear that quickly. Imagine your car is worth $25,000, but you still owe $30,000. You have a $5,000 problem. This is called negative equity. People also call it being underwater. Your loan is bigger than your car. And this is happening to a lot of trade-ins. Nearly 3 in 10 new car trade-ins were underwater in Q2. The average underwater amount was almost $6,900. Exactly $6,884. And here is where the trap can become a snowball. You want another car, but your old debt hasn't disappeared. Imagine you owe $6,000 to $1,000 more than your car is worth. You trade the car anyway. That $6,000 to $1,000 can be added to your next loan. So your new car begins with old debt. It's like buying a new backpack, while keeping bricks from the old backpack. The new backpack starts heavy, and now you pay interest on the extra weight. The CFPB specifically warns about rolling negative equity forward. And the newest numbers are brutal. Buyers rolling negative equity averaged a $944 payment. But look at their interest. Average projected interest, $16,270. $16,000 just for the privilege of borrowing. So maybe the answer is simple. Just buy used, right? Sometimes that can reduce the amount you borrow. But used car financing has its own problem. Average used car APR reached about 10.5% in Q2. That's higher than the 7% new car average. The average financed used car amount was about $30,000, $30,414. And the average monthly payment reached $576. So used does not automatically mean cheap. You still need to inspect the loan, price, APR, loan length, and total interest. Here's one sentence worth remembering. Buy the car by price, not by monthly payment. A monthly payment can be changed very easily. Stretch the loan, change the down payment, add money from a trade-in, roll in old debt, add optional products, and suddenly, the payment looks comfortable. But the total cost may be huge. So ask for the actual vehicle price first. Then ask how much you're financing. Then ask the APR. Then ask exactly how many payments you'll make. Before signing any car loan, ask 5 questions. Question 1. What is the total price? Not the monthly payment, the price. Question 2. How much am I borrowing? Question 3. What is my APR? Question 4. How many months? And question 5. How much total interest? If someone only talks about monthly payment, bring the conversation back to these 5 numbers. Also, compare financing before walking into the dealership. Banks and credit unions may offer different terms. Even small rate differences can matter over years. And never assume 0% financing is common. Only 1.2% of new buyers got 0% APR in Q2. What if you're already inside a long car loan? First, don't panic. Start by learning 2 numbers. How much do you still owe? And what is your car actually worth? The CFPB recommends checking both before trading. If the loan is bigger, you're underwater. Knowing that number gives you choices. You may decide to keep the vehicle longer. You may investigate whether refinancing lowers your borrowing cost. Or make extra principal payments when your contract allows. But check fees and loan terms first. Don't replace one bad loan with another loan that merely looks cheaper monthly. Your goal is less total cost, not prettier monthly math. So here's the entire car loan problem in one picture. The car is one box. The loan is another box. Never confuse them. A great car can have a terrible loan. And a boring car can protect your wallet. Today, Americans owe about $1.71 trillion in auto debt. Auto debt rose another $28 billion last quarter. But your personal decision starts much smaller. One car, one loan, 5 numbers. And one question, what will this really cost me? That's Wall and Wallet Big Systems, your wallet, everything between.